Have we reached peak pessimism on China? That's the title of the new Financial Times piece by our next guest, saying the turbulence we've seen in the country's property market suggests a financial crisis scenario is more probable for China than a big bounce back. With us to discuss is Rockefeller International Chairman Ruchir Sharma. So Ruchir, what is your argument here around the pessimism in China, which has been backed up by the data?
Exactly. But I think that it's getting a bit more difficult to stay that way, quite frankly, because some of us have been bearish on China for quite a while, and we've had this conversation for the last few years. And at that point in time, there was a lot of pushback. I mean, even a couple of years ago, a lot of money on Wall Street was totally besotted by Chinese tech and was fully invested in there. Things have turned dramatically, especially in the last few months. And now I get a feeling there are lots of people who are bearish, and you read the front pages of all the newspapers these days, and we get so much bearish takes on China. And the question I ask is that if it's in the news, is it in the price? So I think it's getting more difficult to remain bearish on China when everyone's gotten so bearish. And yet there is the probability that there's one last leg down remaining, like we were in America in August of 2008, just before you got a final flushing out. So it's a very difficult and tricky call to make at this point in time. But for people like us who've been bearish on China, we're starting to ask the question that is it already in the price now?
But you've stopped short at saying we would buy.
Yeah, I think that, as I said that, I keep debating this, that are we, still in August of 2008. Having said that, we are nibbling in some stuff in China. You see some of the stuff which is happening beneath the surface. Look at what's happening as far as EVs are concerned. You've got some of these EV companies in China that are doing really well, and China is emerging as the largest exporter of EVs and cars in general. And some of the technology you have in China is still quite credible and still quite strong. So we are nibbling in China for the first time. And I think that to completely disengage from China at this stage when everyone's turned very bearish could be a bit risky. And yet to go full in is also a bit difficult given the fact that the property market crisis hasn't resolved itself.
Yeah, your FT piece yesterday, which I read, my takeaway was the danger that it could be dramatic on the downside. I mean, you do point out the aging population, the debt burden, the strange way in which government is reacting to entrepreneurialism. Why are you not more worried about something bad happening, some kind of shock?
Yeah, I think that I'm worried about that, but I'm concerned, Carl, that the sentiment's gotten very negative. And even if China follows the path of Japan in the 1990s, which I think has become the consensus view now, recall that Japan had some very powerful rallies along the way, including in 1993, just 3 years after the bubble burst, which is that you got the Japanese stock market went up 50, 100%. Japanese economic growth accelerated from nearly 0 to 3%. So you can have those kind of pretty strong comebacks when pessimism gets very negative. So I think that that's where I'm coming from, which is that I've been a bear on China, but it's getting more difficult to stay that way unless you're willing to say that China is going to have a full-fledged crisis.